Goldman Sachs reporting results that blew past estimates today, though the stock is well off its highs, Wilfred. What's driving it?
Yeah, so smashed the analyst top and bottom line estimates Goldman Sachs did for the quarter. The most pronounced part of the beat was trading, particularly fixed income currencies and commodities. That FIC revenue was $4.2 billion, up 250% year over year. JP Morgan's yesterday was up 120%. Citi's was up 70%. They had nearly $3 billion in equities trading revenue. That's up 46%, also very strong and better than JP Morgan's and Citi's in terms of year over year gains. Their investment banking revenue came in at $2.7 billion, up 36%, also very strong. The question, of course, now is whether this can all be repeated in the second half of the year. And here is CEO David Solomon on that topic as it relates to capital markets.
I don't have a crystal ball as to what's going to happen in the next 6 months. I've had some discussions with people where people talk about some capital markets activity being pulled forward, and there's no question that some refinancing has been pulled forward. At the same point, there's been a whole bunch of activity that we could have never imagined would have occurred because of the virus and the economic consequences of the shutdown. So when you look at industries like airlines and cruise and travel and leisure, there's been an enormous amount of capital markets activity that was completely unanticipated.
Now, away from the investment banks, PNC and USB also reporting their numbers. USB numbers were strong, beats on both lines, and they had less of an increase in provisions than had been forecast. PNC was less positive on the provisions front, but nonetheless, the stock higher. Why? Well, USB and PNC weren't as bad as Wells Fargo, which yesterday was still a question for the regionals to answer, and that will continue next week as well as more of them do report. But Wells itself reversed most of yesterday's losses too. So positive vaccine news no doubt moving the sector as it has all cyclicals today. Despite that, all bank CEOs have been referencing the enormous uncertainty over the economic outlook and its reliance as well on government stimulus. And that, therefore, is a question as to how sustainable this bounce in bank stocks is today. Nonetheless, they're up. And tomorrow we'll hear from Morgan Stanley and Bank of America, Sarah.
Yeah, I think that is the big question, and that is fiscal stimulus. In a way, you know, they've seen this artificial boost in terms of client accounts and the direct deposits, the bankers that is, from their customers, because the government stimulus has been so plentiful, that extra $600 on unemployment benefits per week, the PPP funding, keeping people on payrolls. And the question is demand going to come back enough for jobs and in the economy to get that going when these stimulus effects wear off? And to me, that seems like one of the biggest uncertainties and a common thread we're hearing from the bankers, why they're not going with the V-shaped recovery theme, Wilfred, because even if they're not seeing pervasive weakness, they're preparing for it because a lot has been distorted artificially because of the unemployment benefits.
Absolutely. And none of them are confident in what they can predict about the second half of this year or indeed the next 18 months. All of them sort of say, yeah, we're confident we've provided enough for bad loans if our base case plays out, but they have less confidence than ever before that their base case will be the reality. The other oddity that I'd just bring up today, Sarah, the only bank that really has had widespread beats in almost all of its segments, you know, with no caveats, no offsets, to the positivity is Goldman Sachs. And Goldman Sachs is the worst performer of the banks today. It is up only 1%. Wells Fargo, which was unquestionably the worst performer of the group, is up 4.4% today. Now, it was down more yesterday, but it's kind of strange that when you look at the performance today. And similarly, yesterday, we were getting a kind of cyclical bounce in other sectors, but the banks didn't perform. So we're a little bit all over the place. Now, part of that does, of course, come down to where we were coming into this week, and banks have been terrible performers. So even if you're having a less positive outlook from the CEOs in terms of macro picture, you're coming off a low base, and that's certainly a factor at play too.
Yeah, and there's a bit of a rotation theme going on in the broader market as well today. Technology is not doing as well, for instance, as industrials and materials. So value's working, and that tends to be the group that had been lagging is picking up some steam today. So maybe that's going on within the banks a little bit as well.